If you've been fading the market at the wrong time, getting run over on trend days, or chasing moves after they're already gone, this tool is going to make a lot of things click for you, because the problem usually isn't your effort. And it's not that you need 10 more indicators. The problem is that most traders don't understand the current market condition. They don't know when the market is balanced, and they don't know when it's in price discovery. And because of that, they keep using the right idea in the wrong trade environment. And this is where the new Price Wave Deviation Bands come in. These bands are built to help you read statistical price expansion and reversion directly on the chart, so you can tell when extremes are worth fading and when they're the beginning of a continuation move instead. I want to be clear, this does not replace the VWAP Wave system. It's designed to strengthen it. We use the same principles and the same auction logic, just another layer of clarity for traders who want more confluence and cleaner execution. So in this class, I'm going to break down exactly what these bands are, how they're derived, and why they fit perfectly inside the VWAP Wave framework. And most importantly, how to use them without getting chopped up in the wrong volatility regime. Because once you understand context, the setups get a whole lot cleaner. So let's jump into the charts. All right, so let's talk about a couple of these tools, right? So interestingly enough, before I hop on today, somebody emailed me. He's not a current member. He's a free member, but he has my email and he loves to give me feedback. And he says, you're adding so many things that you're complicating what was a beautifully simple system. And I take all feedback very seriously and critically. And I wanted to think about my answer to that. And I think my answer to that is the system stays absolutely the same, right? The principles and the concepts do not change, all right? A lot of these additions help people that see the market differently. There's some price discovery continuation traders. There are some mean reversion traders. And essentially, I've been looking, I always keep my eyes open for ideas and tools that may help supplement what we're doing. But none of the rules or concepts to the system have changed whatsoever. If anything, the recent addition of this RSI tool and the bands are perfectly in line with the system, right? They're traded exactly the same way. And that was my response, LJ. Anything that isn't adding value or you don't find is helping you, you can just turn it off, right? Just remove it, because the system can be very simple. But by itself, I think you might need some additions. But I did want to share that, guys, because I think, he might not be the only person feeling that way. And I wanted to just make sure that everybody understands that none of these are requirements, right? These are all, I want to call them enhancements. So, for people that are looking for additional edge or tools that help them see the market differently, then that's awesome. If not, you can trade it very basically with the core concepts and the free tools, right? So that doesn't change. So I did want to address that. I thought it was an interesting comment. Is what it is, and we'll move forward. Okay. So let's talk a little bit about these bands, right? How they're derived. Okay. First of all, it all started with the RSI tool here on the bottom. Okay. This was brought to me by LJ, who's in the group here. This is an adaptive RSI framework that is based on statistics, the same exact way we trade the volume profile and we trade deviations on the VWAP bands, right? Same exact concepts, with the upper band kind of being our value area high, the lower band being our value area low, with these zones being kind of the shoulders, right, or the one standard deviations. Anything above it is a, kind of an extended move or expansion price move, price discovery, or an extreme move. Same thing to the downside, right? So very simple concepts, all stays the same. And I think a lot of people have really enjoyed this addition. I think it helps us wait for rotations. I think it allows us to see the price action, because this is based on price action, not volume. Right, so this has been kind of the marriage between the volume tools, which is the VWAP and the volume profile. Those are our volume tools, where the RSI tool at the bottom and the bands are based on price action itself, actual price. Okay, so the way we've been using the bands essentially is when we're in a trending environment, right? Or if we're trading up here. So context matters. First, I'll say this first. Context matters, right? So we still need to use this chart to determine, are we in balance or are we in price discovery? Okay, if we're in a balanced market, we're going to look to fade the extreme. So anywhere from the gray bar out, right? Just because price dips in out here doesn't mean automatic price discovery. If overall the context is rotational, a dip above or below into price discovery is still a good mean reversion or rejection spot. However, if we are clearly in price discovery or trend, right, on this chart, right, this is going to stay, it doesn't always stay extended like this, right? So any pullbacks to this gray area, but a deeper pullback, all right, even though we've re-entered this area, based on the statistics, the middle line or even this far end gray area can still be a pullback continuation trade. And that played out almost incredibly beautifully on today's chart, right? Because I was just talking about this yesterday. I think, Chuck, you heard me, right? I'm pretty sure I made a specific comment to you that when we're in trending or price discovery conditions, even a pullback to the far band is still trend continuation. We don't have to stay here or here for price discovery. Okay, we can still be trending and come back into this area, right? This could be the deeper pullback short, which lined up almost perfectly with VWAP, right? And then we came back now that have more of a range, right? This became the long and it lined up with this. So very cool. So this was the first measure that we introduced, and this has helped a lot of people. So my next idea was like, this is awesome. I love this. It's helping a lot of people, right? So how can we take this and then take it to the next level and actually put it on the chart? Okay. And guys, it's not as easy as it sounds. That's why it's taken so long. When I talked to the developers and we started going through this and talking this through and seeing how this happens, it's not as easy as it looks. Like we can't just put the line, the areas on the chart and boom, there they are, right? It seemed like an easy idea in concept, but as soon as I started talking about how to make it happen, they're like, well, it's not quite going to work that way, but we can do it as dynamic bands. And I was like, well, that's even better because that's typically how we trade our system in the VWAP Wave system is based on bands. So we started rolling this idea out. And essentially, this is now deviations based on price itself on the chart, right? So the same concepts apply. When we're trading outside of the bands, right? This is an expansion. This is price discovery, and there's no mean reversion trade. This can go, nobody knows how far this can go in this direction before it eventually builds some structure and levels out and comes back inside the bands. Okay, at which point we'll expect more stable conditions, and then these trades become better. Okay, so what I've discovered in backtesting and looking at this tool based on our principles is that the mean reversion trade, so that's where when we buy the bottom band or we short the top band expecting the mean reversion trade, right, back to the center of value, doesn't typically work when there's a volatility expansion, an increase in volatility. Okay. So with that in mind, guys, all right. So if I'm telling you that the mean reversion trade doesn't work well on the bands and in an expansive volatility regime, right, where volatility is increasing, when would you tell me is the worst times to use the band for a mean reversion trade? So the question is yours. When would be the worst time? The open. Very good, JP. Exactly. The open, the close, news, any type of explosive movement is going to ruin that trade. Okay. So it is what it is. So that means the mean reversion trade is going to work best in stable. What did you try to buy the band at the open? Or you've just studied, you've just been a good participant since we started and you understand it really, really well. It's one of the two, JP. So that's where you're going to look for more directional movement. What we want is volatility, stability, and we want volatility compression for the mean reversion trade. That's where price becomes a lot more stable. It's not moving violently in one direction. It's more rotational and calm, right? That's where we're going to get the best mean reversion trades or fades. Okay, so news, open, close, right? Or any other type of volatility expansion is going to make us think twice about fading the bands. London is an excellent fit. It seems like it works really well in Asia and London. Tompin, right? The New York Open seems to be you have to wait till like after 10:30, 11 to get a setup on the mean reversion. Okay, so volatility compression and stability, right, are going to work really, really well with this tool. If you look at last night, right, there were a lot of great setups, and pretty much every time it came to the band, it reversed. Pretty damn close. Except for the open, which was an expansion, a volatility expansion, right? Then it had a return to value. And then every time it touched the band, that was it, guys. Every time it touched the band after this volatility expand, oh, you can't see it. All right, so you see this volatility expansion here after the NVIDIA earnings, right? Once we return to in the bands and things stabilized, right? So not here, but once we came back in, right? Every time we came to the band, things worked much, much better, right? Much more stable, rotational price action. Okay, does everybody understand that? Any questions on that? So this is based on standard deviations, just like the volume profile, just like the VWAP, except it's based on price, right? So it even has a middle line, right? So this is the average price. I'd like to do a quick pause here. If you're serious about becoming a consistently profitable trader and you want more than just free content, the Drysdale Inner Circle is where I work directly with traders at a much higher level. This is for traders who want structure, accountability, deeper system training, personalized feedback, and a real plan to improve, not just more random information. So if that sounds like you, be sure to get on the Inner Circle waitlist now. Spots are limited when I open it back up, and the waitlist gets first priority. Be sure to check the link in the description and put your name on it. Now let's get back to the class. All right, there is a middle line. All right, so these are deviations on price. Okay, the calculation is based on the adaptive RSI framework and taking that deviation. Yep, absolutely. So you're going to have less setups on higher time frames, and you're going to have more setups on lower time frames. Right? So for swing trading or longer term trades, there's no volume involvement. No. It's strictly price action, strictly based on price. So yeah, so you're going to trade whatever time frame, the lower time frames as a day trader, you're going to have to use lower time frames. It's not like Bollinger Bands, no. Bollinger Bands aren't statistically derived. That's a completely different equation. Not quite like ATR either. It's more deviations, again, statistically, right? So what do I mean by that, right? You guys understand like the volume profiles based on a distribution, right? Right. And 70, if you guys have ever taken statistics, right? 70%, 67% actually, or 69, right? Whatever it is, 67, 68. 68%, 0.2. All right. Most of the volume or price action takes place, and that's where we get our value area high and our value area low on the volume profile, right? Statistically, only 15% of price trades up here, and statistically, only 15%, give or take a couple of points, trade down here, right? And we know how the volume profile rotates from value area to stream, contest, and comes back to the edge of value. It's the same exact concept as the volume profile, guys. No different, right? No different than here, right? Statistically, most of the trading takes place between the bands. Same thing here. Statistically, 70% of price action is going to take place between the bands. Yep. It's a little different. It's the same concept. It's very similar. Right? You're going to see little tiny differences, but not by much. Okay. So any questions on this? Well, don't Bollinger Bands expand on volatility differently, where you get like these really instant expansion of the bands and very narrow expansion of the bands and less in volatility? That math equation is quite different, isn't it, Tony? Instead of a standard deviation that doesn't take into account volatility. All right, why don't we look at the difference in Bollinger? All right, these are Bollinger Bands. Put it on the same length. Okay, quite different. Very different mathematical formula, Tony. And I'm not saying you're saying they are like Bollinger Bands. I hear what you're saying, like when I talk about deviations, but it's a different mathematical formula. So, Mikey, context is everything. You can't trade this or this without having a market context. Okay, are we in balance or price discovery? And then you adapt, you trade them accordingly. It's not always the same. Were you here at the beginning of the class? Because I did go through that. You still have to know what market condition you're in, right? You just can't trade the bands. You just can't trade the zones, right? Because they're going to behave differently according to the market condition. Okay, so he's asking, can they be on the R side? Yeah, there could be a slight little difference, right? Like this is poking through above the gray band here, but not quite make it there. You know, it's a little bit of a different mathematical formula. I think it takes it to the next level as it's on the chart. It's not an oscillator where it's range bound between. See, this has open to either side, right? These bands can go as high or as low as they want. This is an oscillator. And oscillators are bound by 100, 90 to 13, whatever it is, 100. It can only go so high. It can't just keep going, right? So it has to be adjusted to the chart versus an oscillator. Yeah, 0 to 100. No, it's not changing the system at all. Okay, this just gives you another way to visualize price. Give us a couple more setups and give us more opportunity per the system. Nothing changes. Do you want to add this as a confluence? Are you saying? Absolutely. You can add this as a confluence. 100%. Well, how do we use the VWAP bands for an entry on a fade value or extreme? It would be the same, Simon. All right, so if price dips into it, right, just like price coming up to the upper band, right, we'd be looking to short in this area for a return, right? Long, away from it, right? This just got a little bounce though because it's continuing down. So, right, good for a scalp. If it's breaking below, you're either waiting for more stable conditions if you're a mean reversion preference, if your wheelhouse is mean reversion or balance trading like me, or if you're a directional trader and you capitalize on momentum, you're looking to get short. And if you do both, this is where you're getting short. This is where the return to value lived, right? Return to value, fade value area extreme, price discovery continuation, fade value area extreme, fade value area extreme, right? Yeah, absolutely. You know, the market conditions are going to predetermine that. Obviously, we had a big sell-off, and now we're in our next rotation down, which we've been in since 11:30. But it looks really powerful. It's been great in testing so far. A lot of people have really liked it. So here it is. I decided to release it to everybody today. Yeah, it's automatic. You might have to update it, Anthony. Right? So there'll be a little update button. And then it's just right in the toolkit. It's right here. Price Wave Deviations. Yep, it's just in the toolkit. Yep. This version is free, and this will stay free. But this is in the toolkit. So just kind of allows us to get some confluence, right? How price is reacting, right? Because as you know, when we're anchored and we have volatility and things move, right, gives us another layer. Yeah, it seems to reject. We were trading it last night. It went well. What trades did I take last night? I took this long. Last night I took the return to value, right? So we traded below the bands. We came back in and I traded the return to value long. Great trade. I did take the VWAP bounce short. And then I bought this one and this one. I was a little early on this one, but we had the other band right there. I'm glad I was because it worked great. Yeah, it's the TradingView indicator, Robert. Yep. No, you can't change the opacity logger. That's not a feature. They are what they are. All right. Well, so the deviation on VWAP is based on volume from an anchor point. This is a constantly rolling. If you really wanted to go down the rabbit hole, right? So this doesn't have an anchor point. It's constantly ongoing. Now, if you really want to go down the rabbit hole, what is yeah. There is a rolling VWAP. What is it called? Who knows what it's called? I can't think of it. If you really wanted to go down the rabbit hole, we'll go down the rabbit hole. No. No. Is it I don't think it's adaptive VWAP. No. It's quite literally. Oh, here it is. Yeah, rolling VWAP. There it is. Look at that, guys. Kind of looks kind of similar, doesn't it? Let's put on the. So this is a VWAP that has there's no anchor point and it just has a look back period. So it's looking back 10. Let's change it to 14. There it goes. So it never stops or ends. It just constantly rolls. Very similar concept to the price action one. Except this is based on volume. And you can see the bands expand and compress as volume enters and exits the market. And you can really see who's in control as the market continues to develop. Well, you're going to use the market conditions more so. You can use first touch if you understand the market condition, right? If we're in balance and the market is rotational, you can absolutely trade at first touch. But if we're having a volume expansion or a volatility expansion, you're definitely not going to want to trade first touch, like at the open or any type of news event. You're going to definitely want to see what happens at the band. But if we're clearly in stable rotational conditions, you can very easily trade first touch. It's more so based on the market context and the market condition, which hasn't changed, guys. That still always comes first and foremost. And the indicator is not going to tell you that, right? We have to know based on our tools, right? Are we in balance? Are we in price discovery? What are the market conditions, right? And being able to analyze that. Yeah, mean reversion traders know it's really tough to trade mean reversion with tight stops. It really is. Because, you don't know how far it's going to go test before it reverses. Right? So generally we can average in a little bit before we get the rotation down is generally how we trade it. Now you just can't add in indefinitely because if it goes into price discovery, you're dead in the water, right? So you do have to have some type of plan, right? But price can go through it a little bit before it reverse. It happens all the time, right? You just don't want to get stuck in a move like that because then you're dead. That was yesterday morning's open. Right, so very different than a pullback, right, where you can put your stop below the swing low, right? A continuation trend traders do. Or if you're trading momentum, you want it to keep immediately moving in the right direction. You don't want it coming back on you at all. Yeah, that's how I introduced it. Yeah, absolutely. This is price discovery outside the bands. Acceptance, though, not just like a little, in and out, right? Acceptance. Same concept. Nothing has really changed. All traded kind of the same way, right? Is this acceptance? Is that acceptance? No. Is this acceptance? No. Is this acceptance? No. Is this? No, of course not, right? Is this acceptance? I mean, I think it's easy to tell the difference, right? Acceptance. Yeah, right. Let's go back. All right, here's a tougher one. Is this acceptance? Acceptance. I would say no, that's not acceptance. You know, these are 2-minute candles where we spend 8 minutes outside the bands. Is that acceptance? Probably not. Is this acceptance? Oh, this is more like it. Right. Also, mind you, what did I say about this? Was NVIDIA earnings dropping, Russ? What did I say about news? Right. Bands are no good during news. News, the open, extreme volatility periods, useless. Right. But for the most part, when price is pretty stable, right? Here's one that didn't go well, but guess what time this was? Open. Everything else seems pretty damn, maybe this is a little tougher, a little. Oh, yeah, right. So, and that's the volatility expansion. So Ali's saying it gets thin when there's price discovery, and that's because there's a volatility expansion happening. Everybody has access to this one, that effect. This is included in the toolkit. This is a separate product developed by, they're very similar, right? They are traded the same way. This one is just laid right on the chart. Sure. Which one? Developing, it's pretty much, it doesn't repaint, if that's what you're asking. But yeah. I'll make it a little slower. All right, so you can see it coming down to it before it happens. Yep. That was ES, right? And Q. Let's do a replay here. All right, so we're clearly trading beneath the band. As soon as we started accepting back in the band, there was a great long right here. So for those of you who like to bottom pick, this makes a great indicator to wait on volatility expansion because you'll know things are starting to slow down once we start trading back in the channel. I don't want to see it predominantly, Simon. I have it on there he's talking about the midline. I've had it on there very faint. So it's there, it's just very faint. I want to be able to just barely see it. I don't want it to get it too just give me an idea of the price behavior. Right? Because if we're trading below, we're trading below this is like point of control. So this is kind of like bearish behavior. If we start trading above it, we can start to rotate above it and fill out the other side of the distribution. So hopefully this gave you a much better understanding of how to use the new price wave deviation bands inside the VWAP wave framework. Remember, This tool does not replace the system. It's there to enhance it. The edge is still in reading market context correctly and knowing when you're in balance, knowing when you're in price discovery, and then using the bands accordingly. Now, if you want deeper help applying this in real time and you want to work with me at a much higher level, make sure you join the Drysdale Inner Circle waitlist using the link in the description below. And if you want access to the Price Wave Deviation Bands, you're going to find them inside the VWAP Wave System Toolkit on TradingView. The toolkit is exclusively offered through Flux Charts, and you'll find a link to that in the description below. And lastly, if you got value from this video, make sure you like, subscribe, and drop a comment below. I appreciate you guys. Stay sharp, manage risk, and I'll see you in the next one.